Hello everybody, Jackson here with the Well Squad. Today we'll be talking about earnings in the latest Fed meeting. First, we're going to start with Microsoft. You can see Microsoft over here lost to their expectations on the earnings report, where they should have made 6 cents more per share and they should have made $500 million more in revenue. Of course, they lost out on that, but the stock still went up for two reasons. One is the market expected less. They expected the earnings to get slashed for them to lose by 5 to 10% instead of the 2 to 1%. So in the market's eyes, Microsoft had a good earnings. Now, the second reason was the Fed meeting, and we can see here exactly when that was, right here. So this is when the Fed announced that they are raising rates by 0.75%. Or 75 bips. So that is a good deal when it comes to the market because the market loves to see rate movement in the upwards direction, especially when they're low for so long. Next, we're going to look at Google because they just had earnings. Same thing here. They lost out. They should have made more, but the market was expecting more of a loss or less of a gain. And so the stock jumped, right? You can see the same thing rolling out. Now, on the other hand, we have Facebook that had earnings in the after hours. Stock went down a little bit, not very much, because, well, they lost their estimates, number one, and it's Facebook. Facebook has just been slammed every earnings report, it seems like, except for this one, of course, but almost every earnings report, plus it's just a negative stock all around right now. So with this Fed meeting, we can see here, actually, let's check out the NASDAQ because that was affected the most. So just today in the NASDAQ, market went up around 4%. And this is with all the doom and gloom already happening. And this is also with the market down, still 25% from the highs. So we're still in a bear market. And this is just a nice bump that we have seen because of the rate hike as well as these positive earnings reports coming out from the largest companies. So now the question is what will happen now? And I do not believe that this is the end of the bear market. I still think we have more room to fall, especially back to this 270 area when it comes to QQQ and 360 when it comes to the SP 500 index SPY. So that's my opinion. These earnings, even though they're losing and even though they're jumping as a result of not losing so much, they are still losing, and I think people need to realize that, and they will soon. I do think the market has more room to fall. That's just my opinion. So if you have any other questions or concerns, please leave them in the comments, and I will get back to them. I appreciate everyone watching. If you have anything, any critique that I could do for the next video, that'd be great as well. Thank you so much, and I'll talk to you later.